Wholesaling is a real estate strategy where you contract to buy a property and then sell that contract to another investor for a fee. At its core, wholesaling is about finding off-market deals and connecting motivated sellers with cash buyers. Wholesalers typically earn a fee called an assignment fee, which is the difference between the price they agreed to pay and the market value. The process involves finding a motivated seller, securing the home under contract, and then finding an investor willing to pay more for that contract. Unlike fixing and flipping, wholesaling does not require you to own the property or perform expensive renovations, making it lower risk but high effort. Wholesaling requires significantly less upfront capital than traditional real estate investing, as you are trading your time and marketing effort rather than equity. Successful wholesalers often say that their primary job is lead generation and marketing, not traditional real estate management. Always research your local laws regarding real estate contracts. Thanks for watching, and remember to subscribe for more real estate basics.